At $10.5 billion, Adani Group's buyout of Holcim India's stake in Ambuja Cements and ACC marks India's most expensive deal in the sector. With this, the group has also leaped to second position in the cement industry, coming only after Ultratech Cement. While Holcim owns 63.19% stake in Ambuja Cements and 4.48% in ACC, Ambuja Cement in turn owns 50.05% in ACC. The Adani family plans to make an open buy offer to buy 26% stake in these two companies from non-promoter shareholders, subject to regulatory approvals. Once approved, Adani Group will enjoy Ambuja and ACC's combined capacity strength of 67.5 metric ton. Going forward, analysts believe that Adani Group may consider the merger of Ambuja Cement and ACC in the medium term, as it will help them rationalize fixed cost quotients at both these entities. Market analyst Jijo Kalingam, for instance, believes that the acquisition would trigger re-rating of ACC and Ambuja Cements, as businesses may merge under one entity.
Both of them will get re-rated because ultimately both have to be merged, So, that's my view. It doesn't make sense, same individual or institution owning the same business under two companies. So, theoretically speaking, they can be merged. So, therefore, what applies to one can apply to other. See re-rating because Adani Group companies all have a very high PE in the market, even after the severe correction. So, this might give some hope for the investors to bank on Adani stocks, new stocks. Those
at Kotak Institutional Equities too believe that the EBITDA per ton for Ambuja and ACC is lower than Ultratech Cement, and this gap can be covered by Adani through synergy benefit from eventual merger of the two companies. The benefits, it says, may include saving from existing royalty payment to Holcim, investments in cost-saving projects, and margin expansion opportunity through brownfield capacity expansion. That said, some analysts believe Adani may go for brand consolidation rather than outright merger.
Both the ACC and Ambuja, they have been losing market share over last few years. With the Adani coming into the deal, so there will be more aggression in expansion since both Ambuja and ACC are expanding their current capacities, and they are expected to reach 100 million ton of capacities combinedly by FY 24-25. This will be good for the cement sector as we see large players getting more consolidated, and there may be more consolidation happening in the industry moving ahead also. There may be brand consolidation. I cannot say on merger because how Adani will structure the deal and how they will address the market. But brand consolidation will definitely may happen over the period of time because currently both Ambuja has its own brand and ACC has its own brand, and they are market brand in Indian cement industry.
That said, analysts see limited near-term synergies from the deal.
Utilization levels in both Ambuja and ACC are pretty high. So it's not that Adani coming in will immediately change anything in terms of output or the efficiency levels. Though Adani Group is backward integrated, so there might be some synergy gains over a period of time. Number three is it will also depend if Adani Group will go ahead with some aggressive expansion after the acquisition. That could create some pressure in the industry.
Overall, from an investment viewpoint, analysts expect ACC to see higher re-rating as the stock has traditionally been an affordable bet. At the bourses, ACC closed nearly 4% higher at 2,195 rupees per share, while Ambuja Cements rose 2.6% to 368 rupees per share on the BSE on Monday. In comparison, the benchmark indices closed 0.3% up. As regards Tuesday, markets will track the listing of insurance behemoth Life Insurance Corporation of India. Shares of LIC were trading at a discount of 15 to 20 rupees a piece over its issue price of 949 rupees in the grey market on Monday, suggesting a weak listing today.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.